Welcome back to another video lesson here today, guys, inside the boiler room, and we're going to be talking about bullish pennants, or commonly known as an ABCD pattern. So this is a common pattern and a common setup that you'll see a lot of times on penny stocks and also higher price stocks. But at the end of the day, we either call it a bullish pennant or an ABCD pattern. And if you can learn to spot this pattern in real time, it's almost a winning trade every single time. You just need to learn how to spot it and understand what's going on. So first things first, take a look at the screen. All right, so the first thing I want to do is I want to show you guys, for those of you that don't really know what a bullish pennant is. So here's a pennant. All right, and the bullish pennant is bullish, or it is a bullish pennant when and only if the price action comes from below, up, hits a high, pulls back down, bounces, goes up like that, all right? And that is when we have a bullish pennant. And if you look over here, and I'll do this in yellow, it looks very similar, does it not? If I were to draw this up, right, price action goes up, it hits a high, it comes down, it puts in the first low, it puts in a secondary high that's not quite as high as the first high. We pull back, we put in a secondary low that is not quite as low as the first low, and then we go higher. And now if I were to take a red line, and we'll use a red line for video purposes, and we draw out the pattern, here you go. Does it not look very similar? Don't they both look very similar to each other from here to there? Almost identical patterns. Interesting. So what I mean to say is, if you were to go on the internet right now onto Google and type in a bullish pennant, you will end up getting a picture-perfect example. And let's actually pull one up right on the spot. So Google bullish pennant. And let's see what kind of images we get. Here we go. Oh, fair enough. Here we go. Here, we'll just pull over. We'll just open up this picture and we'll just pull it over, right? So here you go. So if you're gonna go to Google right now and type in a bullish pennant, this is some type of picture-perfect example that you're gonna get, or something very similar to this, all right? And there's a bunch of different scenarios. Oh, it's gotta go up and down, up and down, up and down, this and that. But I'm gonna show you exactly what a bullish pennant is. So if you go into Google right now, you'll get picture-perfect examples of what a bullish pennant is supposed to be. Now, of course, they're not always perfect, and it gets, and it does get easier to spot them in real time as you practice more. But sure enough, right here on the stock chart of CODX today, we had a bullish pennant, all right? Or some will call this an ABCD pattern, and I'll mark it off for you. So A is the high, B is your first low, C is your second low, which is higher than B, and then D is actually up top here. It's considered the move up. So D is really kind of everything in this area right here. That is considered D, all right? So what is the ABCD pattern, or what is the bullish pattern, or bullish pennant pattern, and how do you trade it? All right, so this is what happens. Listen carefully, and I'll zoom in and make the video a bit bigger. So we're gonna do a little lesson here. So this is exactly what happens almost 90% of the time when this pattern occurs. Any stock on any given day is having a green day. It's having a good day, and it's pushing higher. It usually occurs, or really it only occurs, after a solid move to the upside. You will see a nice ABCD pattern, or you'll see a bullish pennant pattern. These patterns will occur when a stock is hot or it's having a good day. So what happens is the stock will pop up, and that is A. A, if you're looking at the screen, right, A is the high, the very highest the stock has been. That's A. That's not very been, but A is the pop on the day. That's when the stock first runs up and puts in a high for the day. That is what we consider A. B is the first low that stock puts in after its move up. So stock CODX opens up, it runs up to a high of like 320. And then it pulls back down to a low of about 230. So we have A and we have B. The stock moves up again and puts in a higher low. That is C. So if you're looking at the screen, we have A, then we have the first low after the move up, which is B, and then you go to C, and C is the next low, but it's currently higher than B. So this is what we would be able to confirm that there is in fact an uptrend taking place, okay? And then D represents the move higher. So rather than confuse it with the whole ABCD thing, which you should learn to map out A as the high, and after that move down, that will become B. And then if you confirm a higher low, which is C, you probably have an ABCD pattern. So the way you go about trading this was, say you missed the initial move on CODX. That's okay, because there was another trade you could have took. So if you were to have missed the trade here on CODX, you would have been able to do just this. All right, so if the stock pops up, puts in a high, then you have, B, and then there's C, you would have been able to draw a trend like this, going from the high, following the lows, the lower high. So this is high, this is the lower high. And then you can draw a trend up going from the low to the higher low, right? So you have your low here, followed by your higher low. You also have your high, followed by a lower high. You might be thinking lower high, higher low, it's all confusing, which it might be if you're a beginner, but as you practice enough, you'll understand it. A lower high, right? Lower high and higher lows. So at the end of the day here, this is what you're looking for. After a stock pops up, you will have selling pressure from people taking profits and selling, okay? And then a lot of times you'll see it start to get bought back up. So after it has the initial sell-off, it'll pop back up. This is an attempt. This pop back up is usually an attempt to break through its previous high. And a lot of times it will fail, causing the lower high. And once you have the lower high, you can then draw your trend line down. And then once you get your higher low, you can draw a trend line up, okay? And ideally, for beginners, you will buy the breakout right here over the trend line. For more experienced traders, we will buy it right here, and we will sell it to the beginner traders or the people who buy breakouts. So when we have confirmed we have an ABCD pattern, what happens is newer traders will hesitate and they'll end up buying the breakout over the trend line, whereas an experienced trader will understand the pattern taking place before it breaks out, and we'll start buying it on the dip, and then we sell it to the newer traders, the people buying the breakouts. And that's fine. If you're a breakout buyer, there's nothing wrong with doing it. I still buy breakouts sometimes too. Say if I missed the early entry, sometimes I'll still buy the breakout, okay? So the main thing you have to take away from this is you have to be able to spot the pattern in real time. The way you do that is by practicing over and over and over and over again every single day. That's how you spot it in real time. So to take a step back for a second, and I'll zoom out here. What's taking place here was an ABCD pattern. Let me walk you through it. Okay, so let me zoom in just a little bit. Okay, so on this particular stock, it opens up, the stock goes up, we put in its first high a day, that will become A. And then say if you miss that and you're watching it come down and it puts in this low, this is B. And a lot of times the stock will move back up. It will try to break through its previous high. I just drew the arrow there. Again, on this move up here, a lot of times the stock will try to break through its previous high, which would have been right here. When it fails to break through the previous high, that's when we get this lower high, which starts moving back down, okay? And then what happens? We get C. Do you notice how this area here, letter C, is higher than B, right? This low here is still higher than this previous low. So what does that do? That creates what we call the uptrend, okay? Now we're trending up. Right here we're trending down, and bottom here we're trending up. So not all the time will this happen, okay? It doesn't happen all the time. I mean, the pattern happens all the time, but just because you see a stock go up and then pull back and then go up again doesn't mean it has to be setting up for an ABCD pattern. You know it's setting up for an ABCD pattern or a perfect bullish pennant trade when you get a nice high followed by a low followed by a identifiable lower high here, followed by a nice bottom here that's above B, which is C. Okay, and now if I zoom out, right, if I were to zoom out here and clear everything off, tell me, doesn't that look like a pretty picture perfect pattern comparing what you would normally see online? It really does. Stock pops up, pulls back, goes higher, pulls back, and then runs. That looks like a very picture perfect pattern. So the way that you trade it, this is the key thing. How do you trade it? Well, like I said earlier, you can do it the novice or the more beginner route, which is buying the breakout, which is the breakout above the trend line. So remember, in this pattern, when you're doing it, you have to draw a trend line from the high a day, followed to the next in the next high a day. So you have your main high followed by your lower high. You draw that trend line. The beginner entry will be a break above that trend line. The experienced entry will be someone buying up the dip on this lower trend line right there. So again, there's two ways to trade this, okay? You typically don't enter here. Some do, but I'm not gonna say most, but that isn't trading the ABCD pattern because at this point, there is no ABCD. There's only an ABCD pattern once C has confirmed, okay? So you don't have an ABCD pattern until C, okay? And C is the confirmation of the uptrend. This is our low a day here. We pop up, we pull back. That's our first low for the day. And then once the stock goes up again and pulls back, but does not pull back quite as far as B, that's when we know we have confirmed an uptrend. And at this point, we know that we have an A, B, C. Chances are we're going to break out here in a second, and that will end the pattern, and that will confirm D. Okay? So once you have C, you've confirmed A, B, C. And that's when you can anticipate that the stock is going to go up, in which case you're going to get D. Okay? So typically, the best way to buy this ABCD pattern is when the stock pulls back for the second time, confirms the uptrend, you pull the trigger here and buy at C in anticipation that it is going to break out over the trend line. And once it does, that's where majority of the volume will come in because majority of people have trouble spotting the pattern, hesitating when buying, or cannot psychologically wrap their head around buying a stock before it really, really starts moving. And it's hard to do that, and I hesitate too sometimes. But at the end of the day, you're supposed to be buying on C and selling up here, okay? So, like I had stated before, the more experienced traders will buy C, and they will sell it to the not so experienced traders or the novice traders or beginners, and they will be selling to them as they are buying it here. Okay, so the C traders or the experienced traders buy C, and as it breaks out, they start selling to the beginner traders who are buying the breakout. And that's why a lot of times they'll pop up and then get slammed really hard because you have a bunch of people that got in really low down here that are now just dumping all their shares because they made a ton of profit. So whereas you just bought the breakout and you're hoping to squeeze some pennies out, they are already making a chunk of change on it, okay? And they're really making the chunk of change on you because you're buying the breakout, which means you're buying shares that somebody else is selling, which most likely is the shares that were bought down here from, more experienced traders, and they're selling it to you as it breaks out, okay? And that's the thing is more experienced traders can anticipate a breakout. And when they can anticipate a breakout, they know that there is going to be volume on that breakout from people buying. So chances are they're going to be able to get the shares off their hands very easily because there's going to be someone willing to buy shares when it breaks out. All right. And that for you is the ABCD pattern or a bullish pennant pattern. And it always occurs after a strong move up. After a strong move up in the stock, you'll always see a pullback and then some sort of consolidation. So when you hear about a bullish pennant, ascending triangles, and bull flags, those only occur after a solid move up. Or if you're talking bearish terms, a solid move down. Because after a big move up or a big move down, it can't keep going up or down for forever. So at that point, it will pull back and it will consolidate. And that's when it usually forms into a pattern. The pattern that's forming is traders either buying or selling the stock, getting ready for the next move. Because it can't just go up and down straight without ever pulling back. It just doesn't happen. So when it pulls back, that's the time you start thinking of patterns in your head or looking for the patterns to occur. And they'll occur after the stock goes up and then pulls back, because that's when everyone starts selling and everyone starts getting ready for a potential next move. And those patterns occur during the pullbacks or the consolidation phase, which is after a strong move up. So I hope you guys like the video. Stay tuned for more videos here in the future.